It is the liquidity in the US dollar that is partly the author of its strength. If we look back at US policy going way far back, well, first of all, before the SWIFT system, we didn't have the ability to freeze people out of interbank transfers because they weren't there. But I think that the US dollar has enjoyed a really, truly glorious franchise for a very long time before we began to be so overtly political with regards to our treatment of the dollar. The dollar, in effect, became everyone's reserve currency. And the power that afforded the U.S., in particular the power of seigniorage, the ability to print the world's reserve currency, because loans around the world and commodities around the world traded in dollars, there was more demand for dollars than if they could merely be used to purchase U.S. goods and services. The franchise that we're busy destroying with regards to the U.S. dollar is the single most important franchise in the history of the planet. We're doing our best to wreck it, but the truth is that the franchise is so deep and so valuable that despite our best efforts, when I say ours, I mean Democrats and Republicans, despite our best efforts, we don't seem to be able to wreck it. I need to say that you have a countervailing political idea around the world, which is to say that one of the ways that you manipulate your domestic economy relative to other domestic economies is to devalue your currency so that your export goods become more internationally competitive, which is to say you compete by lowering the living standards of your citizens. The United States appears to be less aggressively doing that than places like, say, Japan or China. But there are also countervailing political trends which would suggest that in many fiat currencies, what citizens have to look forward to is a continual race to the bottom. One of the reasons why I've always been attracted to gold is because gold doesn't have an internal political constituency in favor of devaluation. I'm delighted, frankly, that the Fed has decided to allow interest rates to rise, because a policy of artificially low interest rates, on the face of it, penalizes savers on behalf of spenders. And a nation doesn't get rich by spending, it gets rich by saving. So the idea that the Fed, whatever their political motives has been, has allowed or even caused interest rates to go up, I think is on balance a very good thing. I wish the Fed would just get out of the way and let the market set interest rates, but of course that will never happen.
Obviously this year we saw countries looking for solutions outside of the US dollar. They want to be, unchained from it. Is this a theme and trend that you're paying attention to? And what are your thoughts around the rise of the BRICS, and is that a concern?
I don't think it's a concern at all. To the extent that there is more trade between emerging markets, those emerging markets get richer. And to the extent that they get richer, we get richer. I'm pretty unconcerned about artificial political and economic groupings. All of these countries are acting in their best interests. I'm reminded of a phrase that says, countries don't have friends. Their leaders and elites have interests. I can assure you, from having done business around the world for my entire adult life, almost everybody, I say almost everybody on the planet would rather do business with us than each other. The reason that you're seeing an increasingly anti-American coalition around the world, I would suggest, is because of the attempted artificial imposition of American values and American politics on other people. In other words, we're leaving them no choice. Whether or not our policies are superior to theirs is a different question, and that depends on whose point of view you're using. They, of course, are using their point of view, and they believe that they need a multilateral response to the artificial imposition of U.S. values internationally.
Very valid point. And how long until it turns around and bites the U.S. back?
I think it's already biting the U.S. The truth is that the United States has such an amazingly deep franchise. I forget which economist said this, but there's a lot of ruin left in a country this great. Certainly enough ruin to last my lifetime and probably yours. I own gold, not gold stocks, but gold itself, as an insurance policy. And gold maintained its purchasing power. Gold maintained its purchasing power despite more than doubling of the deposit rates on savings products, which is much better performance than I would have expected. As we've said before, I own gold for insurance purposes and I own silver for speculative purposes. I'm disappointed, of course, that the speculative part of my portfolio and physical silver didn't do better. I note, however, that in most bull markets, gold needs to lead and then silver in fact follows. With regards to the gold price, I think if the Fed is forced to pivot, which is to say, if rather than continuing a period of higher interest rates, they are forced because of deterioration in the economy, slowing durable goods sales, imploding real estate prices, a real equity bear market, and particularly in the face of very broad disintermediation of long-term bond holdings, then I think you'll see gold really, truly go off to the races. Rising interest rates murder the capitalized value of long bonds. And the institutional investors around the world, but particularly the pension funds, the profit-sharing plans, the university endowments, have portfolios that are loaded with long bonds. We saw what happened very briefly in the British gilt market when the capitalized value of the long bond declines and the portfolio values of these very large investors decline to the extent that in order to meet the actuarial assumptions, they have to increase contributions to the pension funds. And of course, they don't have the money to do that. The great, I think, sort of unidentified bomb in the economy is the undercapitalization of pension funds in the long term to meet their obligation, and their overwhelming reliance on long bonds at artificially low interest rates. The twin perils for them are the decline in the capitalized value of those bonds in the face of rising interest rates and the negative real interest rates that they're getting. Yes, they're getting 400 basis points, but they're getting it in an instrument or in a currency where their real purchasing power is declining by 300 basis points a year. If you reduce the purchasing power of a pension plan by 200 or 300 points a year by 20 or 30 years, what you've done is guaranteed poverty for the beneficiaries of that pension plan in their old age. And I think that we have a political conundrum that we have to face 5 years from now or 6 years from now with the chronic underfunding of these pension funds, with our inability to maintain the living standards that the beneficiaries have come to expect that they will enjoy.
So that bomb is ticking now, not exploding yet.
Correct. I think that's right. And I think the political class rather put off dealing with it until they're out of office, because there's no easy way to deal with it. For a 69-year-old Luddite, gold is easier to understand than crypto. The value proposition around crypto, I think, has been its anonymity, which crypto adherents are trying to get rid of, and the ability to have frictionless trades. I love the technology around the blockchain, and I think that the blockchain and the distributed ledger is the future for securitization and securities transfers. With regards to the product, which is to say crypto, it attracted a whole bunch of people because its volatility. But its volatility reduced its utility, which is to say the fact that it went up and down rapidly may have attracted traders, particularly the up part. But the truth is, unless you lived your life entirely in Bitcoin, if you went to buy a cup of coffee with Bitcoin, you never knew what price you were actually paying for the coffee. The very volatility in Bitcoin that attracted speculators and promoters reduced its utility as a medium of exchange and as a store of value.